Hello and welcome to the Next 100 Days podcast. My name is Graham Arrowsmith.
And for the 350th time, my name's still Kevin Appleby. 350 episodes, Graham.
Oh, I know. Well, in the past, on the 50th, 100, 150th, we've had some really special guests and some times to reflect back on the times that we've had. And we've had some absolutely amazing guests over those 350 episodes. But today is absolutely no exception. Today we have Vedat Mizrahi. I hope I've got that right. Welcome to the Next 100 Days podcast.
Thank you so much. Thanks for inviting me.
So Vedat, no pressure there then. No pressure from Graham.
No, I think I've got your name right. But Vedat, you are a director of Mintus. Tell us a little bit about that.
Yeah, sure. I'm the chief financial officer at Mintus. I joined early this year. Before actually investing in Mintus, so I first became an angel investor in the company. And then I was invited to become the CFO of the company. I used to work for a private bank at the time, a Swiss bank. Mm-hmm. And on the side, I was doing angel investments for the past 5 years. And Mintus was my 12th investment, early stage growth company. I liked the idea. And then when I was offered the opportunity to become a part of it, and help grow my investment and grow the company, I didn't think twice, and I joined Mintus as CFO.
So as CFO, you've only got yourself to blame if you lose all your money.
Exactly.
Well, Kevin's day job is he kind of helps something called Grow CFO. So he's surrounding himself with chief financial officers day in, day out, aren't you, Kevin?
Absolutely, yes. And that's a startup as well. I mean, we've been going about 3 years and just growing very, very quickly. Big network of CFOs being established. So I'm hoping I might see you in there, Vedat.
Oh, well, it could be like a main event guy who comes along, tells the rest of them how to do it, but I don't know.
We've got a few of those.
Yeah, no, I guess you have. But going back to Mintus, what was it that first got you interested in becoming an early stage investor in Mintus? What was it about the whole idea?
Actually, I've known a similar company. I don't want to advertise that company, a US competitor.
Sure.
I've been following for some time, and I've actually looking to invest with them. Not invest in the company, but invest with them in fractionalized art. So I was familiar with the concept. When I heard about Mintus, knowing that they are a UK regulated company with an amazing board, with a similar, but I think even better business structure, I thought it was no-brainer. The competitor at the time had already raised $110 million at $1 billion valuation. This is a 20 million pounds valuation. I mean, if it's successful, then I can make at least 50x from this. And now, I have the opportunity to achieve that and to contribute to that. But I was familiar with the concept. I love art, apart from that, and I've been in finance for a very long time. I've done 14 years of investment banking, mostly at Deutsche Bank, and then some wealth management. For all this, in total 18 years, I've looked at liquid markets like equities, bonds, commodities, the boring stuff. Now I can do something in finance, which is exciting. The product that I'm selling is backed by an amazing artwork.
Now, the art that you're talking about, generally speaking, has been completely inaccessible, even to high net worth individuals. It's the province of the super ultra high net worth individual. You basically have to have millions and millions to be able to invest in some of these artworks.
Yeah, I would say 500 million plus, because I had private wealth management has clients who have 50 million or 100 million, they wouldn't buy a $5 million Andy Warhol, putting 10% of their wealth or 5% of their wealth. And if they wanted to build a collection, then they will have to spend all their wealth. So it didn't make sense. So it's really, really an elite, a small group of investors that were able to access this asset class. Yeah. Even if you wanted to, let's say you sold your company, you made $1 billion, you don't know what to invest in. You don't know whether that's, artist has a good track record. You need to do lots of due diligence to be able to find the right pieces of art to build a collection. So that's where we come in. We don't give accessibility. We also bring a lot of expertise on the table.
I see. So basically, you're helping people make an educated decision, but also you're showcasing and you're granting access at a fractional level to those artworks.
Correct. Yes, correct. We look at post-war contemporary art, artwork produced after 1960s to date. Mostly established artists, like 40 artists or so that we focus on. And we consign them. Consigning means we talk to the collector, we sign an agreement, we put his artwork on our platform, raise money against that artwork, and once the fundraising is closed, then we pay our supplier, and at that time the ownership of the painting changes from the supplier to the fund that we structure.
So if I invest now, we can talk about the level of investment in a minute, but basically if I invest now, what you're saying is that my co-investors, who I don't know, basically they would actually invest, and then at some near point in the future, presumably, that's when it's almost executed, and that's when you become an owner.
Exactly. Everyone, we work with, again, an FCA regulated custodian. Everyone sends their funds and how much they want to invest into the custodian. The custodian keeps the ledger. In the ledger, we know everyone's KYC information, how much they've sent, and how many shares we allocate to them.
Right.
Each share is $20 usually. So depending on the value of the painting, if it's a $5 million painting, there are 250,000 shares. The minimum investment amount is 150 shares, so $3,000 through the platform. So they keep the ledger. The moment we hit 5 million, we close the fundraising. So unlike crowdfunding platforms, we cannot have overinvestment, so we cannot get a diluted. We close them, first come, first serve, and we are closing, soon. The moment we hit 5 million, then the exchange happens, and then we send the shares officially to the shareholders. Everyone can see their shares on the platform in their portfolio. Kin Capital Partners, our custodian, have all that information. And then we keep the painting for a number of years with the expectation that it will continue to appreciate in value. So, for example, Andy Warhol, his annual performance has been 12.3% for the past 40 years.
Wow.
Correct. Amazing performance at that 65x in 40 years. So
Kevin Appleby's performance has been nothing like 12.5% per annum for over the last 40 years. It's because he's a Newcastle United fan, so it's more like, minus 1.5%. So I don't know, Kevin.
12.5% of what, Graham? That's the question.
Well, well, that's a good point, actually. Explain how you have got to that number based on an Andy Warhol.
So these are calculated based on repeat sales. Right. So when, for example, the Andy Warhol self-portrait painting that we have is up for sale for 5.2 million.
Right.
The previous transaction took place in 1991 at $104,000.
Oh,
so
right.
We look at the performance. It's 50x, let's say, in 30 years. Then we calculate the compounded annual growth rate for that painting. So not for this painting. We do this for all the paintings.
Yeah.
where we have publicly available data. And for Andy Warhol, I think we have 185 transactions. Based on that, we are able to calculate the average compounded annual growth rate.
Well, there you are, Kevin. I mean, I mean, the Andy Warhol picture is quite. He obviously painted it. What back in, is it 1966? I think.
1966. Correct.
That's when England won the World Cup, Kevin. That's a long time ago.
It's a long time ago. I can barely remember that. Yeah.
No,
But
you know.
now, you're talking about that compound 12.5% over quite a number of years. Generally, is the growth relatively straight line, or are there peaks and troughs?
No, there are. I mean, some periods where there have been some volatility. We've seen one during 08, 09 global financial crisis. Then for Andy Warhol specifically, I don't know the reason. In 2016, 17, there was a drop. Usually when these drops happen, we don't see many transactions over low volumes. But even if a few transactions take place at lower price points, it affects the index. In the global financial crisis, I mean, we've been told by some collectors that successful hedge fund managers who made a lot of money have bought into art. So as latecomers, not as long-term holders of these pieces. And when the crisis hit, they had to liquidate some of these assets at lower price points. And they have been picked up by these long-term collectors. But in any case, we had witnessed lower price points, and that affected the index. So we cannot say that it's a straight line increase, but over our investment horizon, which is up to 7 years, we think that, I mean, we will, any of that peaks and troughs will be eliminated, and we will achieve those returns.
Yeah, makes a lot of sense. Yeah. Yeah.
So what you're hoping then is somebody's going to invest. Let's just say it's from $3,000. And just by the way, why do we have to invest in dollars?
The painting, I mean, this market is 80% is in dollars, like the auctions and etc. So when we are discussing at the exit, the potential buyer who will put this painting on his or her wall will give us a dollar price. And the costs associated with it is in dollars as well. So initially we actually started with pounds.
Yeah.
And we decided that we made the wrong decision, and we switched to dollars. And also dollar pounds parity also have gone sideways. I mean,
well, no, indeed. Yeah. Well, apart from that, plus I guess it makes it easier to compete with other people that you mentioned that we will not mention their name, but basically they're Americans.
Yes, exactly. I mean, people talk in dollars. Obviously, when a UK investor is always personally taking the currency risk here. So if pound, appreciates against the dollar, he may lose some of the performance here.
Now, on your website, I've noted that you have a sort of growth chart for Andy Warhol and another artist that we can perhaps come to, but basically for Andy Warhol against the same time period where you might have invested in the S&P 500. So Andy absolutely mullers it. He's so much more of a rewarding investment.
Yeah, it's been almost 3x. I mean, S&P did, I think, 23x during the time horizon, and that's 65x. Yeah. But the issue is that most people were not able to benefit from that performance, and now people can.
Yeah, I mean, really, what Mintus are actually doing here is you're liberating this wonderful asset class. I mean, we were all able to buy pieces of art down at the local, whatever, art gallery or whatever, but they're not the Andy Warhols. That's where the real growth has been. As you said, 3x over that period is compared to a growing stock market, a bull run in the stock market, and yet you're way above them in terms of performance for the high end art. Is art generally Is art generally a growth area?
It is, but for emerging artists or for, affordable artists, obviously there is a lot of supply, and there's a lot of demand. So when there's a lot of supply and demand, obviously during times of let's say recession, when people turn to savings due to increasing interest rates, or there are other opportunities to invest, they go somewhere else, and you see there's more volatility in those lower price points artists and less at the higher price ones. And we focus on the higher price ones, anything above 1.5 million, because their supply is limited.
Yeah.
And the Warhol, that's obviously there's no additional supply coming in. The other artists that we'll talk about, Kondo, he's still producing, but these are established. They have a established collector base who sought after these pieces. And
this other one that you talked about is a guy called George Kondo, and he was quite new to me, but I've seen some of these paintings. They look really interesting stuff, and I imagine they're very collectible. And actually, if you measure Kondo's performance against equities since 2002, he's had a 40.2 times performance. So he's grown immeasurably and way above the FTSE 100 or the Nikkei 225 or the S&P 500. He's just way out in front.
Yeah, he's, according to a Christie's report, he's one of the greatest artists of the current, era. Some people call him the new Picasso. And because his work resembles Picasso, has been inspired by Picasso. Not only Picasso, but also like old masters like Velázquez and Goya. But big similarities with Picasso, with big torso and heads, a lot of cubism in the art. But what he says is, what he differs from Picasso is Picasso had a number of perspectives on objects. Like, he would show 4 different perspectives of a portrait or a horse. Whereas Kondo says that his work is more psychological cubism. So in the painting, he shows 4 different states of psychology.
Okay.
So
I'm not quite sure I understand what that means, but states of psychology. This is a question for Kevin, really.
States of psychology. I wouldn't even slightly claim to understand that. But
I kind of figured that.
A few moments ago, Vedat, Graham said that, look, you can go down to the local art auction. If you're a collector, you can buy art within your price range. Now, you bring it home, you more than likely hang it on the wall, because and a good part of collecting is to be able to see and enjoy the piece of art that you've bought, as well as investing money in it. Now, I can see the attraction of owning an Andy Warhol, owning something that is really, really collectible. But I've only bought a percentage of an Andy Warhol. So do I get my 2 weeks to hang it on my wall? Or is it locked away somewhere where nobody ever sees it?
We've talked about that a lot. Obviously, it's not feasible to.
Don't allow it to go up to Newcastle. You'll never see it again. They'll be robbing it as soon as it gets to Newcastle. But I know, don't be doing that. I do like the idea of having prints, though. I do think that has legs potentially for investors. I don't know if that's something you've thought about. So
there are certain copyright rules.
Right.
Even if we own the painting, we don't own the copyright of the painting.
I see.
And the Warhol Foundation owns the copyright, and we need to get permission for the prints. But what we can do and what we will do will be sending share certificates. People are owning a share in a special purpose company that owns a painting.
Yeah.
So showing their number of shares, how much they've invested, and on the share certificate, we will be able to show the picture that they've invested in. The other thing that we are planning to do, normally these will be stored in climatized, airtight storage in Delaware Freeport or any other Freeport. They are insured, and the insurance policy covers only if they stay there. So the moment we move the painting, we need to get another insurance policy, and the transportation costs are very high. But what we are thinking is the moment we hit 10 paintings, we'll bring them over to London and put them in a gallery and invite all the stakeholders to come and see and appreciate the painting. Everyone should be able to see it. If it's in a private collection, only the private collector sees that painting. So it's not social, right?
I love that idea. I really love that idea because it's a very social thing. And I think when it comes to the certificate of ownership, I mean, Kevin, what you do is you frame that, wouldn't you? And that would be a wonderful talking point. I mean, ordinarily you wouldn't do that with a share certificate. It'd almost be gross, wouldn't it? But if it was something to do with art, it's a conversation stopper or starter that you basically are able to talk about Andy Warhol and possibly 4 states of psychology of a condo. But I mean, I don't, personally, I think I'd run out of breath talking about that. But I'm not quite sure what that means. Off air, we'll have to have a word about that, Vedat, because to be honest, I've got no idea what that would mean. But you see that the logic is that you can actually display this and start a conversation, especially if it was in your office or something like that.
Exactly.
So, okay. The investment, art investment generally, again, on your site, you have something, why invest in art? And most of us have an emotional reaction, you say, when we're presented with a new piece of art. And that's true. Whether you love a piece or hate it, chances are it'll spark some debate. And I think one of the things about investing is very much about having an emotional connection to the investment. And I think this is what you're doing here. What you're doing is you're liberating, or you're making it possible for people to get into that market at a very cost-effective, from $3,000, very cost-effective way.
Yeah, exactly. I mean, some other, fractional platforms go even below that, but we are a regulated company, so FCA and us, we want to make sure that the right investors come here. Sure. So we do an appropriateness test on our website before giving full platform access to the investors. So we don't want to sell a wrong investment to the wrong person who doesn't have enough savings or who doesn't have the experience and knowledge.
Does somebody have to be high net worth, or do they just need to be affluent, which is not strictly speaking high net worth?
Yeah, affluent is okay. How we define sophisticated or high net worth is anyone that has more than 100K in savings, or 100K in gross income, on an annual basis, and then that's a
that would definitely be affluent as opposed to high net worth. There are other definitions, but that's very encouraging, because a lot of people would likely, there's so many more people who fall into that affluent to the high net worth market. And so therefore that would widen the platform to a lot of other people who are more than capable of investing $3,000.
One thing we talked about a few weeks ago with Kevin Whelan was the idea of a self-administered pension fund. Now, if you're looking at self-administering your pension fund, you'd probably quite easily have $3,000 or multiples of $3,000 that you'd look to invest, some of those in more risky investments, some in safe investments. Would this be an appropriate thing for a self-managed pension fund to be coming along and investing in?
I hope one day. We've been talking to a lot of institutions about that, because it's such a huge market and people's savings are sitting in all those liquid instruments. And in a year like this, where all this linked with investments have drawdowns of 20-30%, the pensions were killed. If people had some alternative investments like art or real estate or a hedge fund or a private equity, that would have preserved some wealth. Mm-hmm. Currently, art is not an allowed investment under the SIPs. But in the past, real estate was not either. So now, I mean, you can do real estate investments there. So we're hoping that one day, which is not far from today, art could be included in the SIPs. And
Well,
that's
I think
amazing for us as well.
I think Kevin was referring to the self-administrate, the small self-administered scheme, so the a SAS pension, and I believe it's true that art is excluded, but I might be. But the necessary sort of approach that you're taking, I think it would be a very compelling case for HMRC to wave that through, because it's not necessarily, as have explained, the Andy Warhol won't go and sit on a wall in Northumberland. It will actually stay, and it's an investment. So in some always, as far as I'm concerned, it's exactly the same as taking a fund, investing in a fund in, I don't know, net zero or whatever. So the whole idea of this is I think it's entirely appropriate, but then again, I'm not making the decisions.
Yeah, I mean, we are on the same on the same side on that. Yeah, we need to just convince them because it's such a huge market, and I mean, it would really help us grow the business and make it more accessible to a wider audience.
Yeah, absolutely, and in a fairly lucrative area, which, let's face it, we need or we will need over the next few years because of the pressures of other things that are happening to people. So one of the things you talked about was this idea of offering I'm not sure if it's advice, but having experts within the Mintus team, or at least the people that you can refer to sort of give some advice between, if you've got sort of, I think did you say 20 or 40 artists?
The artists that we follow, yeah.
Okay, so 40 artists that you follow. How do Kevin and I choose between one rather than another? I mean, we can see the graphs maybe of their performance, but if they're relatively new artists, how would we go about making a judgment from an investor's point of view?
Okay. First of all, we are not able to give advice.
Okay.
Alternative investment manager regulated by the FC. So we manage funds, but we do have a process which filters out any bad investment. There could be obviously bad investment, but there is a committee, there is a very detailed due diligence process where we, look at not only the authenticity and the provenance of the artwork, but also the future growth potential of them. And this is all based on a lot of data analytics and also expertise from the sector. So we have an art committee which is chaired by Brett Gorvey. He's very famous in the contemporary art world, ex-Christie's chairman until 2016, and other people from auction houses, galleries, and finance people like myself. Looking at potential returns. So whatever we put on the platform have already been filtered through that process, and we think that we can deliver our target returns, which are around 15 to 20% per annum. That's our target returns, but obviously it's not a promise or a guarantee. But choosing between Kondo and Warhol, the investors need to make their own decision which one to invest in. And when we talk with people, we tell them, have a budget in mind and allocate that into 10 paintings. And if you want to invest 50K over the next 2 years, allocate 5K to each painting so that you have made your own diversified portfolio. Yeah,
that makes a lot of sense. And actually, it's a fairly typical kind of investing model favored in other parts of the world as well. So that does make a lot of sense. But so if it comes to your $3,000 investment in, say, either a Kondo or a Warhol, if you want to be spreading your bets, you have to find $6,000. Am I right?
Yeah, correct.
So it's a minimum of in any one artwork.
Correct. Yes.
And do you see? Because art is not just canvas and oils and so forth and paintings. Are you going to be moving into other forms of art?
not in the short term, especially like, I mean, if we're talking about sculptures, they don't have the same, I mean, audience and the collector base. It's really harder to store them as well. For example, I mean, there's this Cole's statues. I mean, they are huge.
Yeah, they are big. Yeah.
Our suppliers have one, but it would be impossible. I mean, to transport that either, I mean, from them their townhouse to Delaware Freeport. So for now, we'll stick with the oil. I mean, canvas paintings. It's a very, very large market.
Of course,
billions of dollars of transactions every year. The total transactions, I think, is $65 billion last year, with a total value of assets of 1.7 trillion. So that's what people hold, and 65 is the annual turnover. It's such a large market that, I mean, we can get to billions just on that. After that, we may go into other areas. We may actually go into not other areas of art, but other alternative asset classes.
Right.
So,
right.
I mean, there are companies who does real estate. Commercial real estate is an interesting area. It's a yielding asset.
Yeah.
Renewable energy is quite interesting. I mean, why? I mean, you can be a part of a solar power plant, and you can. I mean, and your income from that power plant could be maybe offset through your electricity bill. It's just like promoting green energy and collective ownership of green energy. I mean, this is where it could go in the future. And once the blockchain, I mean, we have a blockchain infrastructure, but because we are regulated, we are not tokenizing the shares. But once all of this is regulated, people will be able to even swap their assets.
Yeah.
These would be non-fungible tokens. So a share in a solar power plant could be swapped with commercial real estate in Miami or an Andy Warhol painting on the platform. So this is where it's going over the next 5-10 years, in my opinion.
Wow.
Is that tradability of the certificate something that exists at the moment? And if say I came along and bought £3,000 worth, got a certificate in a particular painting, is that something that I'd then have to hang on to for the 7 years, or is that certificate immediately a tradable item?
There is semi-liquidity here. We have a secondary market on our platform, which we do not want to open immediately. Our plan is to open the secondary market for each specific artwork 6 months after the closure of the fund. Every 6 months, we'll have a detailed valuation report from an independent party on that artwork, telling what the value that day is. And we will allow people to transact on the platform around that valuation. So if you want to liquidate your investments, every 6 months, you'll be able to do so on the platform if there are any takers. So for there to be takers, you'll need to sell it at a discount, obviously. But I mean, the market value at that time would already be, I mean, hopefully higher than the offering price, even today. So similar to normal equity IPOs, we have an IPO discount. So for Andy Warhol, the fair market value is $6.8 million. We're offering it at $5.2 million. So if that 6.8 goes up to 7 million 6 months from now, and maybe at that time you'll be able to transact at 6.5 at the time, you've already made 20% return. So there will be a secondary market, and the minimums at the secondary market will be lower. So more retail investors will be able to participate, similar to bonds. So when there is a new bond issuance, only the accredited investors are able to buy and bid from the offering, but then they are able to sell it in the secondary market.
Hold on a minute. There's something I don't quite get there. You're putting an IPO in place, so you're saying that you're raising $5.2 million against a $6 million painting.
Correct.
Where does the other $800,000 come from to buy the painting?
No, we agree at that offering price with our collectors. So what we are doing here, when we are disrupting the market, we are disrupting the intermediaries in the market. So unlike other markets like equity brokers and bond traders, where they transact in bips, 20 bips, 30 bips, very small figures. In the art world, the auction houses charge buyers premiums, 20%, 25%. Dealers, like those personal advisors, they charge 10%, 5% to the buyers, 5% to the seller. So we're taking those out. So for our sellers, our collectors, they don't have to pay those fees with us. So instead, we ask them, why don't you give us some discounts? Because you are not paying those fees. Because we need to offer our investors an IPO discount. It's a long-term investment, and we need to create some buffer here as well in case there's a downturn in the market and the prices decline. Andy Warhol is 6.8 versus 5.2. So even if it declines 10%, they will still be in the money. Yeah. And for the collectors, obviously the business model is different in a few senses. So they've bought this for $104,000 in 1991. They've already been making 50x. What they're after is they want to find the artist that will make the next 50x. They are not happy with 15% annual returns or 10% annual returns. So they take that $5 million, they invest into 50 paintings of $100,000. They may pick an artist and they may buy all of his paintings, eliminate the supply out there, and actually manage the future price. So their investment strategy and horizon is different than what we are after, and that's how we are able to convince them. The second thing is we are sharing. We take as a company as a performance fee. So our interests are aligned with the investors, the fractional investors. If they make money, we make money. And if we make money, the collectors make money as well. We share half of our performance fees with our collectors when we are asking for a deeper discount at the offering price.
Yeah. So it all ends up the collector, the owner of the painting who's done a deal with you, is almost certainly going to be ahead. They're not paying these intermediary fees. They've got a performance-related bonus that if and as expected, the artwork appreciates. And the other thing is it's liberating money for them to make significant investments in their future. And that seems a very smart thing to do in an art market that is growing. So they won't be particularly attached to Andy Warhol. Well, they might be, but they're more likely to be attached to 50x returns.
Yes, exactly. They were at the time, and they already have a very large collection of Andy Warhols.
Yeah.
So selling one Andy Warhol and buying, a Joe Mesler at 175K today, where the secondary market is already at 800K, might make sense. So, when you are buying a Joe Mesler, you may not be able to sell. For emerging artists, even if it's established, there are non-resale rules. You buy it from a gallery that represents the artist, and they tell you if you are buying this, you cannot resell it for 3 years.
3, right.
It could be 3 years, 4 years, you buy it with that condition. But in 3 years' time, you know that it will be 4x because the paintings that were bought 3 years ago are now at those $800,000, $900,000 marks.
If you had to call out to somebody who's listening to this and say, look, come along and join the platform, what would the call to action be? What would be the thing that you would say, this is compared to other things you can do with your money, why would you choose Mintus and this particular form of investment?
First of all, any financial investment, has to be done through a regulated entity, in my opinion. So we are the only regulated option out there. And the systems and the controls that we put in place to achieve that are really significant, and it's not easy to replicate. Art itself is uncorrelated with the other types of financial instruments. So the idea of diversification is putting uncorrelated assets in a portfolio so that when one comes down, the other preserves its value so that you have better risk-adjusted returns. According to a recent Citibank report, it advises people to allocate 2 to 5% of their wealth into art. So if you have $100,000 in savings in total, it would make sense to put $3,000 to $5,000 into it just for diversification purposes. And it's inaccessible. I mean, you won't have another chance to own this specific piece of Andy Warhol self-portrait at such a discount. So we have, I mean, normal then hopefully average discounts in the first two paintings, and they are closing soon. So that will be the call to action.
And if you're listening to this in about another 2 years, then basically it's closed. It's already, and we're on to the next few. But you could, by then, it would be good to sort of look up Mintus. That's MINTUS.com, and then you'll find everything that you need to know about this fractional art offer. It's been an absolute pleasure, Vedat, having you on the Next 100 Days podcast.
So, Graham, a really, really interesting topic. And we were interviewing the CFO there, not a salesman, not an investment manager. A really interesting story. And as Vedat told us after we'd finished the interview, that he does have a few challenges of being a CFO of this type of organization. And he is 100% behind this product. He loves the company. He's invested in the company himself and is there as the CFO, which really means that he's passionate about it.
Yeah, I think the opportunity for a growth at Mintus as a company is huge. I think that, you know, over time we'll find out whether specific paintings like the Warhols and the Condos have done as well as they hope they will. But actually, if past performance is any guide, you know, and you can't rely on it, but if it is, then, you know, why shouldn't it be in the next 10 years? So, you know, you're not going to get any more Warhols, and the Condos are much sought after. This is at the high end of the contemporary art market. And if you're looking for better than the sort of fund growth that you get from compilations of stocks, etc., the sort of S&P 500s, you know, the FTSE 100s, etc., the stocks that the funds that you would probably have in your pension, and that you have, say, for instance, opportunity to invest in this. It might be out with your pension, but at the end of the day, you have an opportunity to invest a much smaller amount of money with the prospect of very, very handsome returns.
Indeed. It's and as we discussed during the podcast, you should be probably diversifying that 2 to 5% of your portfolio into the appropriate assets. And I really do think that if you're looking at your portfolio over the next 100 days, then is it properly diversified? Have you future-proofed yourself properly?
I think there's every chance that the answer is no with most people, and you know, the ones who've taken particular interest in this area. Well, the top end of that market has been pretty much excluded to you.
Yeah,
you know, and you know, us two, we would not have had a prayer of having a Warhol on our wall, or whatever, or owning a Warhol, even if it's in a vault somewhere. So but now you can actually own a share of that, and other works of art, as a vehicle for portfolio growth.
Yeah, and there's an interesting aspect to this, Graham, that says, hang on, that the price is entirely driven by supply and demand. Supply of these paintings is pretty much fixed.
Yeah.
There are no more Andy Warhols. The supply is finite. But the demand at the moment in the past has been up to a few very, very super wealthy people.
Yeah.
Now, if you've got a couple of funds coming around along, like the one we've been talking about today, like the American competitor to that fund, and maybe others in the future, then what you've done is actually increase the demand side of that curve.
Very much. Yeah.
Answer, price goes up.
Mm-hmm. I mean, it is likely, but as they say, and they're FCA regulated, so basically they won't be able to make that claim. They'll be able to say past performance is not a guide to future performance. But at the end of the day, if you're staring at a graph that has a line way above the other options for you, and this is really what investment's about. It is about options, and if you have a knowledge and access to that particular option, and you've researched it well enough, then you're not being asked to put the house on it. I mean, it's the price of probably a single fund that you might have in your that you've invested in other ways. And it's probably less than that. So for me, I think it's something that would be very interesting, certainly for me. I don't know about yourself, Kevin, but I have a certain interest in art, and not necessarily contemporary art. But I'll be honest with you, I've got a greater interest in actually making most of my money. Comes from being a Yorkshireman. So can't do much about that, Kevin. And on that bombshell revelation, I've been Graham Arrowsmith.
I've been Kevin Appleby. Goodbye.
Goodbye.